Okay, good morning and welcome back everyone to our Tuesday morning market outlook session. My name is Tony Zhang. I'm the chief strategist here at Options Play, and we have a lot to get through here in today's market. But before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So as normal, what we're going to do is we're going to start off by taking a look at the major equity indices, see where they currently sit, as well as take a look at internationally how things are shaping up relative to the domestic market. We'll take a look at the fixed income markets. We'll look at the dollar. We'll look at U.S. Treasuries as well as gold in the commodity section. And then we're going to take a deep dive into the sector rotation model, see which sectors are strengthening, which sectors are weakening, taking a look at the overall sectors, and then looking at some stocks that are breaking out and looks at some stocks that are breaking down. So let's go ahead and get started. When we take a look at the S&P 500, very clear uptrend, no doubt about that. This trend remains intact. Despite the sell-off we had late last week, we've rebounded 100% of that in the same number of days, actually faster than the fall, which is not typical, if you will. Typically, the markets fall faster and take a little bit of time to grind its way back up. But as you can see, 4 sessions down, 3 sessions back up to new all-time highs. This is really where we continue to see the divergence, higher highs in price, no longer confirmed by higher highs in momentum, both on the short and long-term charts here for the S&P. The NASDAQ 100, very similar price action here, a few sessions down, a couple of sessions back up to new all-time highs, but same type of divergence on all-time highs. As we make higher highs in price, momentum does not confirm those higher highs. This is the market conditions that we have been in for roughly the past 2 months, pretty much since the May lows. We have seen these types of market conditions. So this is, when you look at it on balance, looking at other markets like the Russell 2000, the small cap index, what you start to see here is that the Russell has failed to get anywhere near back to its all-time highs. It's still trading near sort of the bottom end of the range here, Russell 2000 between 210 and 235 or so. Near the bottom end of the range, and momentum actually remains negative. As you can see, momentum has been negative for quite some time here. So looking at potentially the small caps to revisit back to that 210 level here, unless it can break out above this gap fill and then break back above 224. We really need to see it break above both levels before it can get back towards that 235. And then when you look at RSP, the equal weight S&P 500 index, market breadth has improved because the RSP is near all-time highs, but it's still not much further than the May 5th highs here. So the equal weight S&P 500, while breadth is improving, is nowhere near where it really needs to be for this to be what we would consider a healthy market. But one of the major developments here over the past couple of weeks has really been the falling apart of emerging market equities. So EEM broke below this $50 level here, or just a $51 level here a couple of weeks ago, but quickly recovered. And then last week broke below this level and is now trading below this $51 level. So emerging markets still on this downtrend here that we've seen emerge over the past few months. This is something that's important to pay attention to, as international equities is looking much softer here. But domestically, we do see growth continue to outperform value. Growth recently broke out to a new all-time high here as well. And then when we look at the dollar, this is really where the dollar recently came across some resistance around this $93 level here. So far, that level seems to have held this $93.50 resistance. We've seen it bounce lower here, but so far it has held the top end of this range, so it could very well still bounce and break out above this level. That's going to have ramifications for currency traders and gold traders, and we'll take a look at that here as well. But so far, TLT, U.S. Treasury bonds, holding this 146 support level multiple times, so remaining in this range-bound level between 146 and 152, looking like it could potentially retest that upper bound of the range, but so far creating what you would typically call a bit of a consolidation range after what has been a very strong move here to the downside and can potentially break out here. Haven't seen that breakout yet, but that's what is shaping up right now. When we look at the 10-year yields, it still remains on this downtrend. after it tested that level here a couple of weeks ago. Still below 130 here at the moment. Still at the moment expecting that treasury yields will continue to decline until we can break above that trend line here. And then when we look at gold, gold recently did break out above this gap fill level. This gap fill level here is around 160, a little above 168 or so. That certainly stops this downtrend that has been in place here for gold. However, you do have some major resistance still coming up here. If we can break out above this level, especially this particular level, 171.5 or so, if we can break out above that level, then gold is onto substantially higher prices. But there's a fair amount of resistance, in my opinion, around this 168, 171.5 level that gold needs to get above. So we'll have to watch that here over the next couple of days to see if gold can break out higher here and start moving substantially higher. And then we look at sector rotation. So far, we have 7 sectors that are leading and improving and 4 sectors that are lagging and weakening. So certainly more sectors in the better category than worsening category here. And when you look at leading, when you look at leading, what we have here is healthcare and staples. Staples, that's improving, and then you have healthcare down here. Both of them moving into the leading category recently and improving here. And then what you have is you have financials, you have utilities, and you have materials that is starting to lose some momentum here and moving towards perhaps the weakening categories. So staples and healthcare improving, materials, utilities, and healthcare lagging behind. We don't have any sectors in the weakening category here at the moment. So you have 5 in the leading category. And then when we move over here to the lagging category, we have technology, real estate, and discretionary starting to shape up a little bit and moving towards the improving category, with energy really falling down into the lagging category recently from the improving. So energy, as you can see, big fall recently here from energy. And then when you look at improving, you have communications and you have industrials. Communications is actually just moving into the improving category from the weakening category. And then you have industrials that's actually moving down towards the lagging category here. So you have quite a bit of sector rotation here currently happening here, but more sectors leading and fewer sectors lagging behind. And taking a look at some of the sectors themselves, industrials last week attempting to break out higher here above this 104.5, failing to break out higher here. So very much still in this channel, if you will, slowly grinding higher. So not a whole lot of momentum, but certainly positive, not a whole lot of momentum, but still positive here. Technology breaking out above the 155 XLK level. So technology extremely strong here to the upside. Big move here to the upside, mostly driven by some of the moves that we've seen here in Microsoft and some of the big, even semiconductor names that are starting to move higher here. If we look at real estate recently also tried to break out to a new all-time high, but has failed, but remains on the slow grind higher here right now in terms of momentum to the upside, but really a lack of momentum all around. When we look at discretionary, we see discretionary recently breaking below this 179, 180 support level here, broke down, is coming back to retest this level. And this is one that we really want to watch because this is a level that goes back quite some time. And now that we've broken below it and we're back up to it, is it going to test as resistance, and we're going to start to see some movements down? This is going to be a one that we're going to watch here over the next couple of days. That's very important. And there are some big names in this particular space that I think are worth paying attention to. Now, just taking a look at some of the economics, one of the things I did want to point out here is we've been talking about manufacturing and services PMI and how important it is the fact that while manufacturing remains strong, that we need to see services continue to rebound. Unfortunately, over the past month here, we have seen services come down quite a bit. This is largely due to, I would say, the Delta variant and the concerns around the reopening. So the fact that we're now starting to see services soften while manufacturing is starting to soften a little bit here as well. But keep in mind, manufacturing still remains almost a decade high. So while we've seen a bit of a slowdown here in manufacturing, it's still remaining fairly elevated. While services is kind of back to normal, if you will, as opposed to the spike that we've recently seen with the reopening. So we're starting to see services side of the reopening slow down a bit. And on the manufacturing side, as we continue to talk about inflation and whether or not the inflationary environment that we're in is transitory or permanent, we continue to see more evidence that this inflation is still very much an issue. As you can see, input prices for manufacturing continues to climb. We've been talking about the acceleration last month here, and this is a smaller acceleration. So I would say that the increases are decelerating, but they're still increasing. And worse than that, this is now being priced or passed on to consumers. So we're talking about price increases on the manufacturing side that is now starting to leak into the cost of goods that we have to pay for that. So this is going to continue to push inflation numbers higher here, even though they are starting to decelerate. This is one that I think is worth paying attention to. So looking at stocks that are breaking out and breaking down. So we started this new format here last week. We got a lot of positive responses from viewers. So we wanted to continue this series where we provided more charts to show you stocks that are recently breaking out or breaking down, especially stocks that are strong from a relative strength perspective that are breaking out, and weaker stocks that are breaking down from a relative strength perspective. So big one, I think probably the biggest one to pay attention to was the big move we saw here from Nvidia yesterday, breaking out above the 208 all-time highs. A fair amount of volume on all moves here, so this is one that looks like can continue to push higher on a stock that's fundamentally extremely positive here at the moment. Comcast, after the Olympics, which weren't particularly stellar in terms of viewership, Comcast has traded itself into a bit of a wedge here and is just starting to break itself higher here. It's not quite there yet, but I think this is one that you want to put on your watch list and watch over the next couple of days to see if this starts to break out here. Not a lot of volume just yet, but perhaps we might see that follow through if we see a little bit more of that stock breaking out. AstraZeneca also recently breaking out above this $59 level here. What's interesting, it's coming back to retest this level as support. So perhaps this is the next opportunity to shoot for that $61 level here, which is the new all-time high. And if we break out above 61, that certainly puts it into a substantially higher price point here for AstraZeneca. So pharmaceuticals, especially when you look at healthcare, is one of the stronger sectors that we've looked at. So we have a few healthcare companies here to take a look at, including Sanofi, pharmaceutical company. Very big move here from about 45 all the way up to about 55 here or so. It's then spent the last couple of months consolidating and recently just broke out here. It's pulled back a little bit from that breakout, and I think that is your opportunity to shoot for potentially this 54.5, 54.25 here to the upside as we look for healthcare companies that are showing some strong relative strength and starting to break out higher here. Procter Gamble, consumer staples. We're showing you staples is extremely strong here. Procter Gamble is by far the largest weight out of XLP as a sector, and it's just about to test this 146 highs here. Tested at this level here a couple of days ago on Friday, bounced off lower here. Perhaps it might make another crack at this level. This is one also to pay attention to. This is one that has not broken out yet, so this is one that I think I would want to put on my watch list and see if it breaks out above 146 or so. Another one I want to take a look at that's a bit non-traditional here is Delta Airlines. And a lot of investors are looking at the airlines, seeing, when will it bottom here. I just wanted to show you that Delta Airlines recently put in this triple bottom here. So you have a triple bottom posted here in Delta Airlines. It's still in this downtrend here, but, we're very much potentially at the verge of breaking out higher here. It's not quite there yet, but momentum is starting to turn positive here as we've moved sideways. So So triple bottom, momentum is improving, potential breakout opportunity here. If we break out above the 21-day moving average, that would be the first part. If we break out above $41 resistance, that would be the second part. And then I would call this bottoming formation complete, and then we can resume upward trajectory here again. So starting to see the early innings of what looks like a bottoming formation here for Delta Airlines. Then what we do is we take a look at some of the stocks that are breaking down. And a major one here is Target. Target has been on this very, very strong uptrend since last year. This is a stock that was a $70, $90 stock, $80 stock here just last year, is now $250 stock. So a lot of questions from investors saying, is this sustainable? Well, what we have here is a very steep trend line recently that just broke below this level. It did show some strength on Friday to retest that level, but so far it looks like it's starting to bounce lower here. So this could be the start of what could first be more of a neutral view here on Target, where it just moves kind of sideways, and then potentially it might break lower here. But this is one to watch because this uptrend is seemingly looking like it's at risk of turning lower here. And then you look at some big names like AT&T. AT&T has been grinding lower for multiple months here, but recently broke down below this 27.5 support level here. This was just small and first break here, but this is significant because it's held this level for quite some time here, and it's starting to break lower here. The next level of support is around this 26.5, and a lot of investors in AT&T who own the stock because of the high dividend yield, almost 8% dividend yield. And for some investors, perhaps that's fine, you know, that you see some continued capital appreciation to the down, capital depreciation to the downside while you're getting 8% yield. But it's important to pay attention to when stock prices start to break down. Some other big names that are starting to break down here: General Motors. General Motors recently breaking below $50 here. It spent the past year almost above this $50 level after breaking above this level. It spent multiple times testing this level here, but just a couple of days ago broke below this level. This could potentially bring General Motors as low as down to about that $40 level. There's not a lot of volume traded between 40 and 50, so you have a bit of a vacuum here, and this could very quickly tumble back into that $40 level or so. Zoom Video, another big name that has been during the pandemic here. Zoom recently trading between this 340, 400 range here or so. After testing this level here, broke below it, is now back up to that resistance level. It could very well just trade back into this range, but you know, this is a minor support level, potentially one to watch for if there's further downside, especially if it gets rejected at that support level. Rio Tinto, materials company, also putting in a very large top, similar to what we've seen in General Motors and some of the other names like here, and starting to break down here from that $73 level. Coming back to retest this level as resistance. We're seeing that breakdown come and retest this as resistance, and potentially could start moving lower here as well. And with that, that covers what I wanted to hear with you with today's session. I hope that this was helpful in giving you a better understanding of the broader markets, where they're currently sitting, and some of the individual stocks and sectors that are starting to move here in the current market conditions. With that, thank you so much. I hope you guys have a great trading day.